The three rules that I follow when I am trading order block are these. You'll notice I did it in chronological order. The first thing that you look for, the second thing that you look for, and then the third thing that you look for as your final confirmation before you enter. So the first thing that we look at is our overall market structure. So our overall trend. Is the market bullish? Is it bearish? Is it sideways? What's happening in the market? So what I have here is I have a chart example of USD CAD. If we just look at it, look at the chart, you'll notice, let me just get rid of this for the time being. You'll notice that USD CAD is in a massive downtrend. We are seeing lower lows, lower low, lower low, lower low, right? Lower lows and obviously lower highs as well. Lower high, lower high, lower high, right? So USD CAD in this case is quite obviously bearish, right? So we should only be looking for sells, right? The second thing that we look for is that we go down to the lower time frames and we look for potential order blocks. So supply and demand zones just means order blocks. So supply zones are bearish order blocks and demand zones are bullish order blocks. So a demand zone would look something like this. So if I just make it so it doesn't extend, right? So say this is our order block. We want to see the market come back into our demand zone and continue going upwards. If it's a supply zone, we have a similar thing, right? So we have the market first form our supply zone. So the market comes into it, drops off, right? Break structure, remember, right? And I'm going to be going through this later on. And then we want to see the market come back to our supply zone and then drop off some more, which is where we will enter ourselves, right? Talking of order blocks, I have refined the way that I look at an order block and choose whether or not an order block is valid. It's very simple. I haven't changed it massively, but the two things that I look for an order block to be valid, is that it must have broken structure, and also volume must have increased rapidly after the order block was made. What do I mean by that? We're going to be going through that today because we do have a very valid order block on USD CAD. So those are the two criteria that I look for when I'm choosing whether or not an order block is valid, right? So it must have broken structure and the volume must have increased. However, that isn't the topic of today. I might make a video about this. If you want me to, just say so in the comments, about how to choose which order blocks are valid and so on and so forth. But today's video is just our three general rules that we look for and three general things that we look for before we enter trades. So we look at our higher time frame bias, which is sell side, right? Then we look at our supply and demand zones, right? So what we have here is a clear area of supply. Why? This order block is valid. So if I show you, we have this order block here, right? This order block is valid. Why? Because it broke structure, number one. So it broke through this level of structure, right? And also, if you look at our volume, you'll notice that our sell side volume increases massively after the order block is formed. So this is our buying candle. Then our seller's candle is huge. It's an engulfing candle that takes out all of these lows, right? All of our lower time frame lows. That suggests that smart money is getting involved. The market won't move like this unless smart money is getting involved, right? This is an indication of smart money getting involved and therefore validifies our order block. So we have number one, our break of structure. So if we have just that, mark that out. So we have our break of structure validifying that order block. And also we have that rapid increase in volume that causes the break of structure, further validifying this order block as a valid OB. Then what we notice is the market come into our zone, right? We notice the market come into maybe something like the 0.5 of our zone. And then we want to look back and look at the lower time frames to see how we could have potentially entered with this trade. So if I just get the next candle up for us, and then we look back at our rules. Remember, we need to refer back to our rules. Always follow your strict rules, right? Rule-based systems are always far more likely to outperform non-rule-based systems, right? So our first rule was look at your higher time frame bias, look at your supply and demand zones according to that higher time frame trend. What do I mean by that? I mean, if you are looking at a bearish market, in this case we have a clearly bearish market, right, forming lower lows and lower highs. So low, another lower low, another lower low, so on and so forth, right? You want to only be looking for supply zones. So supply zones such as these to take the market even lower, right? There's no point of looking for demand zones to potentially just get a quick scalp up, right, and then close profits. You want to be looking at a trade like this that you can hold for the long term and take you all the way down to make even new lows, perhaps to break structure down here and break structure down here, right? So that's the reason why you always want to follow the higher time frame trend. The higher time frame trend in this case is bearish. Therefore, we are only looking for supply zones. So that's why we were looking for our supply zones. Then our third rule was, so if I just get it up for us, look at your lower time frames and look for lower time frame confirmations. So a lower time frame confirmation can look like a potential Wyckoff schematic, right? That in this case would indicate a sell-off or an order block within our 4-hour POI. So we have, this is our 4-hour POI. So if we just mark it out, we call this our 4-hour POI, right? That the market could potentially right, respect, and we did obviously have the market respect for our OB in this case. Then we want to go down to our lower time frames, see potential lower time frames entries, lower time frame entries that we could get. Entries on the 1 minute, even sometimes, maybe even on the 15 seconds, something like that, that could further validify a higher time frame trend, because there is no guarantee that the market, when it reacts, won't continue just to take it out, and that does happen some of the time. So you don't want that to happen to you, and therefore you do want to be seeing those lower time frame confirmations occur. So if we go down to the 1 minute, you will notice that we have, as I said, a Wyckoff distribution can act as a potential confirmation on lower time frames, and in this case we do have a Wyckoff distribution. So we have something that you could call either this or this our preliminary supply. Let's just call this our preliminary supply. This is our bias climax, our automatic rally, liquidating lows below here. Then we have the market form our secondary test, accumulating liquidity at this little area of structure here, right? Then we have the market move down, break structure to the downside again, forming our sign of weakness. Then we have the market liquidate new highs, both these highs, this high here and this high, right, forming our up thrust. So this is our up thrust. Then we don't have the market liquidate structure again, right? This is fine. No Wyckoff schematic is going to be perfect, right? So we have the market accumulate liquidity but not take out liquidity. So this is our double top, right, that the market has formed. It has accumulated liquidity but not taken out liquidity. That doesn't mean you can't call this our UTAD. The reason why this UTAD is valid is because it broke through all of these structures, this structure down here and this structure, right? So it's the break of structure that caused that move, right, originated all the way up here. Therefore, this UTAD is valid, right? So the market drops off, right, and what does it leave behind? It leaves behind this area of supply. So if I just show you, we make it extend to the right, right, and we just do this style, extend to the right, you'll notice it left behind this perfect supply zone. The market could then come back to enter it to mitigate the buys opened here, and then it could continue dropping further. So that's what we look for. When I say I look for your lower time frame confirmations, this is what I mean. I mean, look at your lower time frames. Look at something like this where you can see a clear Wyckoff distribution schematic occur. Then enter your sells. Here we have Wyckoff distribution schematic. We have a supply zone within our overall 4-hour supply zone. Then also we have our 1 minute Wyckoff distribution. This is a valid trade. I will take this trade because of that. Then what you would do is you'd get your rate tool there, set your alert somewhere at this level. So you set an alert maybe somewhere here. So when the market comes into that zone, you're alert at the market, so you're ready to react to whatever the market does. Then you just wait. You just be patient, right? That should even be the fourth rule. Be patient. Always be patient, right? So you wait for the market to do its thing. It does sometimes take some time. So we are on the 1 hour. This is like almost a day that it takes to come back into our supply zone. It does look like it's coming back up now. And then look at this amazing entry, right? So be patient. That should be our fourth rule. Be patient. Always be patient, right? Because if you don't be patient, the market will not reward you, right? Be patient. Then your stop loss can just go above that 1 minute POI, and simple as you've got on yourself a perfect setup. Then your targets can go wherever you like. Maybe down here, if you like, you can even target like for it to break structure, because remember, we're looking at our higher time frames. We're noticing that it is bearish. We want it to continue going bearish, right? And if we get our Fibonacci, you'll even notice, right, and we make it our full fib, right, full fib, you'll notice we are chilling somewhere. We are chilling at that 0.786 zone, right? So retail traders, we even have retail liquidity on our side, telling us to go lower. That, although that could sometimes not be good, because retail traders do always get liquidated and mitigated out their trades. But we are at that level, that 786 zone, so it could just continue going down and even break structure, and that is what it does in this case. But I would have just taken full profits here. I didn't actually for this trade. I did actually take this trade, by the way, and I did post it in the signals. I posted it on Instagram with proof of me posting on the signals. Will be in the description. You can go look at that if you want proof. Um, I held this trade all the way down. So if I just show you, it does like completely drop. It comes back and then just drops. Hits TP. Nice 1 to 21 trade. So a simple setup. Respect your rules and follow your rules. Create a strict trading plan, and you will be golden. Right. These are the 3 rules that I follow. If I just go back to the higher time frames and I just show you, because it was somewhere up here. So if we just get our rules back, here we go. Look at your higher time frame structure. Look for your supply and demand zones. Right, enter accordingly. Then go down to your lower time frames. Look at your confirmations. Find your confirmations in the form of Wyckoff distribution schematics if you're looking to sell, and supply zones, or Wyckoff accumulation setups and demand zones if you're looking to buy. Simple as. Don't overcomplicate the market. Um, you know, the setups are always going to be showing themselves to you. The market is always forming opportunities. So if you've missed out on a trade, don't worry, that the market is always going to be showing you new opportunities